So what they're going to ask for is 2 years plus the current year of financial reports. So the two prior years, as long as you've been in business that long, they're going to ask for either the Schedule C or the 1120 or 1065, depending on what tax return form you use. So they're going to ask for those 2 years, just as if they asked for your 1040 previously, for your personal return. And then they're going to ask for typically profit and loss statement and balance sheet for the current year. So basically year to date, to kind of, and especially as you get later in the year, because they're like, okay, well, those 2 years are now very old. We're in November now. You're, trying to buy this car before the end of the year to get that depreciation deduction. We want to see what this year is actually looking like, compare it to those, because if you're down over where your prior 2 years were, they're going to use that down year as, their baseline point. If you're up, then, like, okay, cool. We'll just use the prior 2 years and go from there. So yeah, so you're going to give profit and loss and balance sheet for the current year, and then prior 2 years tax returns. So then if you're buying it in the business's name versus personal name, that also again brings in different pieces as well. Like you're still gonna have to give all that information, but then you may not have to give additional information on the personal, like personal tax returns or you know spousal W-2s and pay stubs and things like that, as long as the business itself qualifies for that loan. So just a few extra pieces of paperwork. It was really fun during the pandemic trying to apply for any types of loans, because they were start wanting to require also like audited financial statements and things like that, because like, "Oh, we have no idea what's going to happen here." So now that all of that has passed and it's gone back to more normalish lending, they're still not lending as much as they used to be, but those are the standard, so 2 years tax returns, current year profit and loss, current year balance sheet will be the basic things. Now, could they also request additional information from there? Sure. They might request like accounts receivable, they might request a client list, just kind of some further detail, to make sure that, the numbers are, going to continue and that you'll be able to afford, the loan going into the future. So that's always kind of at their request. They can request just about anything. That's all coming from underwriting, because underwriters love paper. Even if it's virtual paper, they love paper. So they're going to request as many things. And and it could be that they request bank statement. They might also request like the recent couple months of bank statements, things like that. So it's another piece where if you are running personal expenses through the business, whether on purpose or not, when you go for loans, the underwriter can be like, "What's this? What's that? Why do you have all of these expenses in there? Why do you have stuff at grocery stores and gas stations and things like that?" So they'll dig into those kind of information. And again, if it's legitimate, it's legitimate. You just answer and tell them this is what it was for. I was buying, stuff for an event I had at my office, blah, blah, blah. I had, it was food. I needed to get it from the grocery store. Okay. Explainable. It's like, oh, that's the weekly grocery bill for the family. So there's stuff like that. They're gonna be like, yeah, we don't like that, running through your business bank account. So again, if you are planning to move in that direction at some point, if there are any of those items that you're currently running through the business that are personal items, just stop, at least until you get the financing, and then you can go back to, you know, through again and fight that out with your accountant at tax time.